I asked AI to compare current market conditions to the dot-com bubble days of the late 1990s and early 2000s. I asked it to find similarities and differences, and to pinpoint exactly where we are now. I asked for very specific information. Are we in a bubble right now? Exactly when will this bubble burst? I got the answers. In this video, you will hear all of the details, but remember, what you are about to hear is for entertainment purposes only, and in no way should be considered financial advice. If you're okay with that, let's dive in. Picture this, it's 1999. The internet is the future. Pets.com is worth billions. Day traders are quitting their jobs. Cisco trades at 200 times earnings. Sound familiar? Fast forward to 2025. Replace internet with AI. Pets.com with unprofitable startups, and Cisco with NVIDIA. The charts are rhyming, the headlines are screaming, the valuations are nosebleed. I've watched every market mania since the railroad bubble of the 1870s. I was there when tulips cost more than houses. And right now, we're living in a replay. In this video, I'll show you exactly where we are in the AI bubble. Down to the month in 1999, it matches. Stick around. You won't want to miss the date I predict, when the music stops. Let's set the stage. In 1997, the NASDAQ was just breaking 1,500. Amazon had been public for 6 months. Most Americans still used dial-up. But something was shifting. Venture capital poured $14 billion into internet startups, double the year before. The media crowned the new economy. Then came 1998. The Asian financial crisis hit. The NASDAQ dropped 19% in 3 months. Panic? Hardly. The Fed slashed rates. Investors piled back in. By December, the index was up 40% for the year. Sound familiar? In 2023, after the banking scare and rate hikes, AI stocks led the rebound. NVIDIA up 200% in 6 months. The pattern: crisis, dip, Fed pivot, FOMO. This was the warm-up act. The real show was about to begin. Welcome to 1999, the peak of human optimism. The NASDAQ gained 85%, its best year ever. IPOs exploded. 546 companies went public, averaging 71% first-day pops. Webvan raised $800 million to deliver groceries. Pets.com spent $12 million on a Super Bowl ad. Cisco hit a $555 billion market cap. More than General Electric. PE ratios, over 100 for most tech. Profits? Optional. This was the eyeballs over earnings era. Analysts like Henry Blodgett called Amazon to 400 when it was at 200. Day traders ruled. CNBC became must-watch TV. Sentiment: the American Association of Individual Investors Sentiment Survey bullish percentage hits 70%. Contrarians were mocked. This wasn't investing. It was a religious movement, and every cult needs a climax. March 10, 2000. The NASDAQ hits 5048, all-time high. Then the cracks appear. Barron's publishes, burning up, exposing that most dot-coms would run out of cash in 12 months. The Fed hikes rates to 6.5%. Locked-up IPO shares flood the market. Earnings season arrives and misses. Cisco warns, Qualcomm warns. The dominoes fall. By April, the index is down 35%. By October 2002, down 78%. Total wealth destroyed, $7 trillion. Pets.com bankrupt in 9 months, Webvan gone. AOL, a cautionary tale. The survivors. Amazon, eBay dropped 95% but rebuilt on real revenue. The lesson: hype builds empires. Fundamentals decide who survives. Now let's flip to 2025. NVIDIA trades at 75 times forward earnings. Its market cap hits $5 trillion. Microsoft, Google, Meta. Each spending $50 billion plus annually on AI data centers. So where are we now? Let's match the data. From ChatGPT's launch in November 2022 to now, 3 years in, the NASDAQ is up 100% from its 2022 low. We've had a banking crisis in 2023, a rate hike scare and a V-shaped recovery led by AI, volatility, check, 16%, dip in April 2025, quick rebound, media hype. AI is in every headline. Earnings warnings, starting. Meta's $10 billion metaverse loss echoes Cisco's 2001 warning. Is sentiment shifting? Bubble talk is rising, but bulls still dominate. This matches late 1998 to mid-1999. Specifically, November 2025 aligns with April 1999. We're in the acceleration phase. Post-crisis rebound, pre-blow-off top. The mania peak is still ahead. Here's the forecast. The dot-com peak was 15 months after April 1999. That puts us at July 2026, but AI moves faster. Compressed cycles, instant information. Capex digestion takes 18-24 months. Data center build-out peaks in 2026. Energy constraints hit hard by Q2 2027. Earnings reality arrives in 2026 when AI revenue must justify $1 trillion in spend. The trigger: a major cloud provider misses AI growth targets. My call: the AI bubble peaks between March and June 2027, with a burst beginning in Q2 2027, likely triggered by a Fed pause reversal or power grid failure. The crash: 50 to 70% in AI leaders. Survivors: those with real cash flow. History doesn't repeat, but it rhymes, and the rhythm is accelerating. From 1997's quiet optimism to 1999's manic peak, the dot-com bubble followed a script: innovation, hype, overinvestment, denial, crash, rebirth. Today, AI is reading from the same playbook, just faster, louder, and with better fundamentals. We're not at the end. We're in the middle of Act 2. The climax is coming. Whether you're investing, building, or just watching, know the signs: valuations disconnecting from revenue, capex outpacing ROI, sentiment flipping from greed to fear. I've seen this movie before. The ending is painful, but the sequel can be legendary. Stay sharp, stay skeptical, and remember, every bubble bursts, but every burst plants the seeds for the next revolution. Thank you for joining this journey through market manias. If this video made you think, hit that like and subscribe button. Drop a comment. Do you think AI bursts in 2027, or are we in a new paradigm? See you in the next one. Stay curious, stay safe, and I'll see you on the other side of the bubble.